Shopping for a mortgage and wondering how it's possible to be getting such different rate quotes for your mortgage? It can be really confusing when you're looking to get a mortgage rate quote. And a lot of it just depends on the source of the data, the timing, and what information you're providing to the lender. So let's start with the basics about how the news media reports rates. Every Thursday, Freddie Mac reports an average rate for all loans from all lenders. The keys to remember when you see this data reported is that it's reported only once a week based on surveys completed the previous Friday and the Monday of the week being reported. That means a lot can change in the financial markets between Friday or Monday and then that Thursday that it's reported. So it gives you a good estimate, but it's not quite as accurate as a real rate quote. Also, Freddie Mac has historically included roughly a 1% discount point fee in their figures, meaning it's not a no point rate like others typically quote. So that gives you an artificially lower rate with a higher cost. Typically, in a rising rate environment like we're in right now in 2022, Freddie's quotes are lower than the actual market rates that you would get if you were locking in a rate today. The next big rate source is the Mortgage Bankers Association, the MBA. This too is also a weekly report, so it's not quite as accurate to the current market when rates are moving quickly. However, they don't include a discount point fee typically. The best source of rate information in the news, and the one that's used on CNBC's ticker, for example, during the workday, is from Mortgage News Daily. This is a daily figure, and this changes with the market much more accurately, obviously. This is also showing a no point rate, so it will appear to be a higher rate compared to Freddie's number when rates are either flat or rising like they are today. Then you have to speak with an actual lender to get an accurate quote for your specific scenario. Lenders need to know several key pieces of information to determine a rate: the type of mortgage, the term of loan, the property type, the occupancy, the credit score, the loan amount, the down payment or loan to value, and also the property location. Any differences in any of these data points can impact the rate quote significantly. So make sure you're using that info when you're comparing one lender's quote to another. This data can also vary when you're shopping with different lenders, because the reality is a lender is not held accountable to anything that they send you, even if it's in writing, even if it's on a loan estimate or an itemized fee worksheet. They're not held to that rate if it's not locked. The only time a lender is held accountable to the rate that's quoted is once you receive a locked loan estimate. Prior to that, rates change hourly and daily, and your pricing from one day to the next is going to be different. I get calls all the time from borrowers that say, hey, I got a quote from so-and-so bank 2 weeks ago. Can you beat this? Well, if you would have called me the same day you got the quote, I could tell you. Now you need to get a quote from them again and from me, and then we can see where the rates compare. So the key is timing. Rates literally can change several times a day. We've had days this year where we've had 3, 4, 5 price changes throughout a single day. So someone getting a quote in the morning is totally different than someone getting a quote at 5 in the afternoon. And that can obviously impact one rate quote to another. The other piece is the lender can like I said, they can put whatever they want on it. They can show it with 0 points and then tell you, oh, now it's 2 points in cost for that same rate. No one's held accountable, unfortunately, and that's just how the situation is. So you need to ask specific questions of any lender that's providing you a quote. 1, when is that rate quote from? How long is it good for? And what are the actual costs? And costs include, the only costs that matter when you're shopping rate are the lender fees. That can be any underwriting, processing fees, administrative fees, anything like that, as well as any discount points or origination fees. Those are all the costs associated with the rate. The other costs when you buy a house, title company fees, recording fees, transfer taxes, homeowners insurance, property taxes, escrows, all that kind of stuff, that's all going to be the same when you go to closing, regardless of what the lender quoted you initially. It doesn't matter. The only thing you're shopping initially is the rate, the terms of the loan, and the cost of the loan from the lender. That's it. So if you have any questions about this and you're going through the process and you're just scratching your head, how could I have gotten, 3% from this lender, 5% from this lender, and 7% from this lender? They're all over the place. Well, there could be a very good reason in how they're structuring the quote. So give me a call. I'm happy to compare it, go through the numbers with you, and show you what we can do to help you. Have a great day. Thanks.